American LNG and Qatari LNG don't meet these strict regulations, and they're not going to. So something's got to break, and I don't think the Americans and the Qataris are going to break. I think Europe will have to break.
The price of gas in our modeling still spikes. It doubles from, say, $7, $8 to $16, $17 per MCF. And this is because there's simply not enough. We don't have enough verifiers. We don't even have authority bodies defined within the European Union.
If I look at gas, Europe will struggle this winter. It can be complicated, and at the end of the day, what we have seen that the market does in those situations is increasing the price just to destroy demand. And this is what I think that if nothing is sorted out in the coming months, we may face this winter.
You are sending a signal that methane performance matters, and that is the beginning of the development of a global differentiated market that helps increase transparency.
Hello and welcome to The Energy Gang, a discussion show from Wood Mackenzie about the fast-changing world of energy. I'm Ed Crooks, and this is the first of two special episodes that we're going to be bringing you from Wood Mackenzie's conference on gas, LNG and the future of energy. And on this first episode, we're going to be talking about energy security and emissions. The war in the Middle East and the disruption to the flow of exports of oil and gas through the Strait of Hormuz has sent energy security right to the top of the agenda around the world. Decarbonisation, reducing emissions, has been clearly deprioritised. But could the crisis in the Middle East actually help accelerate the adoption of low-carbon technologies? To discuss the interaction between energy security and emissions, I spoke to Anita Adedra, who is the Senior Vice President for Strategy and Market Access at the LNG company MidOcean Energy. And I also spoke to my Wood Mackenzie colleague Valentina Kretschmar, who's a Vice President in our consulting team. I started off by asking Anita about MidOcean's business.
So MidOcean is a pure-play LNG platform. We have assets in Australia, Canada, Peru, and we're diversifying also in other assets around the globe as we speak. Our shareholders are EIG, Saudi Aramco, Mitsubishi, Idemitsu, and so a very diverse shareholder base. We very much believe in the progression of LNG, and our aim is to build a fully integrated chain across all of our assets and a portfolio traded position.
Right. So as you say, you believe in the progression of LNG, developing the LNG industry and the market. That market has suffered a very significant shock this year. I've heard people describe it as the most significant shock in the industry's history. Because of the war in the Middle East and the closure of the Strait of Hormuz, about 20% of global LNG supply has been taken off the market. What effect is that having on your business, and how do you think that's changing the LNG market globally?
So specifically, breaking your question up into two, what effect has it had on MidOcean's industry? It's actually highlighted the importance of geography and having assets that aren't subject to choke points. So our assets, Canada, Australia, Peru, perfect locations without any natural choke points. So that's a really important strategic differentiation for us. It doesn't mean that we're only going to have assets without choke points, but currently the ones that we do have are. So that gives us a really good platform within which to say to buyers, look, we have a diversified platform and we're going to be a continuous, reliable supplier to you. Now, your second question, the impact on the industry, that's a bigger question. What we've seen in this particular episode, I'm not sure it's the biggest impact on the energy industry. Prices were actually higher during Ukraine.
Right, so that's in the aftermath of Russia's invasion of Ukraine in 2022, you mean? Right.
Yeah, and it was much more prolonged as well. Yeah. What we've seen, we did see a spike at the beginning of the Iran conflict, but we've actually seen prices come down quite a lot from that panic peak, as I call it. And what we're seeing is we've seen America turn up as the swing supplier. It can go anywhere. And it does have the Panama choke point, but that doesn't stop it from going around the Cape. It just means more shipping, a little more cost. And what we've seen is China as the swing buyer. So China's reduced its demand, and it is reselling LNG to other players. And therefore, we're seeing these two huge players, the largest supplier in the market, the largest buyer in the market, actually balance the market. Unfortunately, we've also seen the impact on very price-sensitive countries, which have absolutely no way to manage this sustained volatility. They've gone through Ukraine, they're now going through Iran. They can't afford these high LNG prices, and so they've retreated back to coal. That's a problem because price-sensitive countries are the engine of growth for the LNG industry. And so we have to find a way to make LNG more affordable, reliable for these countries so that they remain in the LNG space rather than turning away entirely.
Right, because then if, as you say, some of those price-sensitive countries are driven away from importing LNG by high prices at the moment as a result of this shock, what's going to happen to them? They're going to use more coal, are they? More renewables, more nuclear? Which direction will they go in?
A variety of directions. Coal is the obvious choice. It's abundant, it's cheap, it's available. Unfortunately, it's dirty. And it's impacting these countries even more than before. And the reason they moved to gas was to try and clean up their air, India being a case example. And Pakistan, again, trying to get ahead of the curve by putting in FSRUs.
FSRU being floating storage and regasification units. So this is sort of a vessel that you can use to import LNG, basically.
Absolutely, yes. Have been priced out of the market. Those volumes simply go somewhere else to somebody else who can afford them. And so they've retreated back to coal. We have nuclear, modular nuclear coming into play in lots of these developing nations. Ultimately, they will have to now look at much more stable diversity. LNG will remain part of their mix because it's available and they have the facilities, they've invested the capex. But on a long-term basis, if they're seeing ongoing volatility, and it's not just Iran, it was Ukraine, and prior to that it was the pandemic. And so I think in this conference we've seen that volatility isn't something that's just going to come in short bursts. This is now the way that our world will continue to evolve, lots more volatility, geopolitical volatility, and the energy space is going to suffer from all of that. So they're going to diversify in all sorts of energy sources.
So Vanya, what's your view on this then? When you think about these longer term trends then and the ways that energy demand might be changed by the current crisis and, as Anita was saying, that sense that volatility in these gas market, the oil market as well, is not a sort of a short-term phenomenon. It's kind of endemic now. It's something that everyone is going to have to live with in the long term. How does that change the way you think about the energy transition, the transition in general to lower carbon energy sources?
Yeah, I think it's a very fragmented world when we talk about the energy transition. So I think this crisis comes at the, really in the middle of this declining energy transition trend in the West. So,
sorry, declining in the sense of?
Declining in the way that, or rather decelerating rather than declining. So decelerating energy transition trend. And this is because it has been very much, in the West, has been very much driven by the regulatory pressure. And this regulatory pressure, I would say, sort of we reached our peak ESG in 2021. Since then, we had obviously post-COVID, Ukraine, focus on security of energy supplies. All of that has really decelerated the trend. Now, with this latest crisis, there are a lot of voices that are saying, okay, so this is our opportunity to actually really improve resilience in the system. We have to go back to accelerating this trend again, sort of to invest. We need to invest more in renewables. However, let's not forget the core reasons, the real reasons as to why this trend decelerated. In the West, many of the clean technologies really have never reached escape velocities, and returns on these technologies were really not satisfactory for investors. So allocation of capital became increasingly the problem for many investors. So there's one reality, and this is the reality that in the West, this has been sort of always a real problem.
Because those technologies relied on policy support.
Because technologies relied on policy support, regulatory pressures, rather than the actual fundamentals that enable these technologies to grow, as we are seeing in China.
Right. I mean, you've been talking about the West and kind of a broad sense. Are there not very significant differences between the United States and other countries? You know, in the US, clearly, we've had this very, very sharp pivot in policy from the Biden administration, which prioritized climate policy and was very keen on accelerating the transition through the Inflation Reduction Act and a whole host of other policies. So the Trump administration, which is very much deprioritized climate policy and wants to develop fossil fuel industries as much as possible. There has not been such a dramatic shift in Europe or in other developed economies, has there?
Well, that's correct. And I think the transatlantic gap always existed. It was much narrower between the US and Europe, UK, including the UK, before President Trump. But now it has really deepened and widened for all the reasons that you've just said. But in the UK and in the European Union, we still have really the same pressures that continue to push companies towards decarbonisation, towards disclosures. And the one actually regulation that's very much going to affect LNG and gas industry is the EU Methane Emission Regulation. That is very much is going ahead as far as the European Union is concerned.
Right, so explain that. What is that regulation and what effect is it going to have?
So the EU Methane Emission Regulation, or the EU MER, requires all importers of gas, LNG, crude and coal to be compliant with the EU MER regulation or OGMP, which is Oil and Gas Methane Partnership 2.0 Level 5. This is your gold standard, top level standard. And that means really, in essence, that all your measurements, the bottom-up measurements, have to tally up with top-down measurements. And it's quite challenging to achieve for many companies. And according to our assessments, there's quite a lot of gas that Europe needs that simply does not comply with this regulation. This regulation really kicks in earnest from January 27, which will leave a lot of players that are actually importing these commodities into Europe non-compliant.
So, Anita, how are you thinking about these issues and this new regulation at mid-ocean? Are emissions something that you're focused on? Are you trying to drive down emissions through the value chain? And do you think it's going to be possible to meet this European regulation so you can continue to export gas into the EU?
I think sustainability is important for all companies. So I think let's give that a baseline, okay? So the problem that Europe is facing is that it has weaned itself off Russian gas. It still has Russian LNG imports, which definitely don't meet that regulation, by the way. And it's still looking for a lot of LNG from America as part of the trade discussions it was having with President Trump. And it relies on American gas. America is now the largest importer of LNG into Europe. American LNG and Qatari LNG don't meet these strict regulations, and they're not going to. And if Europe insists on them, they won't get that LNG, which then is an existential crisis for Europe because it doesn't have Russian pipeline gas anymore. So something's got to break, and I don't think the Americans and the Qataris are going to break. I think Europe will have to break, and Europe will not be able to sustain these levels of regulations.
So what I think is that Europe is not going to break because they also realize that these countries are not compliant. The LNG that's coming into Europe is not compliant. So they understand that, and what they're trying to do is they're trying to mitigate it by not imposing fines on importers. However, that means that where does that leave the importers? That leaves the importers like, okay, we can import this, but we are not compliant. So what are the legal implications, reputational implications of this? And it's for many of them, it's simply not an acceptable position.
So I have to say, it surprises me a little bit that the US industry is not compliant. And I'm interested in your views on how far it is away from being compliant, because we hear such a lot about how the upstream industry in the US is reducing emissions all the time. There's a huge amount of effort going into stopping methane leakage, identifying what they need to do to reduce their emissions. And famously, these are changes that companies can often make at very low cost or even at a negative cost, in the sense that if you stop the gas leaking, then you can capture it and sell it, so it has positive value, and that will more than cover the costs of the changes you need to make to stop those leaks. So, as I say, it's surprising to me to hear you say that this is actually going to be a problem for US companies seeking to export to the EU.
So when I say they're not compliant, I don't necessarily mean that US gas or Qatari gas, or in fact, other gas are not able to mitigate emissions. They all attempt to mitigate emissions. And I think the US, even under President Trump, who pulled away all these regulations, individual companies continued to do the right thing, because ethically, we're all human, we all live on the planet, and we want to do the right thing. So I think that is going ahead. The challenge with compliance to a regulation is it's prescriptive. And if you're saying to a company, I need you to verify every single molecule of gas that came through your LNG chain, that's not possible if you're buying off the grid in America, because you can't go back to find which molecule came from which basin. Now, if you come from dry gas in the Haynesville, you are almost 100% compliant if you can trace it back to the Haynesville. If you're associated gas in the Permian, where there's still some flaring going on, then maybe you're not. But ultimately, trying to pin everything down to the prescription of a very, very detailed and extremely punitive regulation means you're not compliant.
Right, got it. So it's those traceability issues, that transparency,
yeah,
that's really important.
It is a traceability. However, again, I think the EC understands that they can't live without the US LNG or Qatar LNG. So there are a lot of conversations right now where they're saying, even though it is written into the primary legislation, right? So traceability element is there, they're yet to change it. But what they are saying is that, okay, we are going to allow certified gas.
And to be clear, what is certified gas then can kind of demonstrate its emissions, and it has some carbon intensity that's below a certain threshold, something like that.
As long as there's enough certified gas in the US that is equivalent to the amount of LNG exports, then it will be seen as compliant. However...
And sorry, just before you get on to your however, just on defining terms, so certified gas, is that the same thing as responsibly sourced gas, which is another term I hear? Are they those kind of two things interchangeable, or...?
From a non-ESG specialist, for me, they're interchangeable. If you can show that you've responsibly sourced your gas, then presumably there is some form of identification and verification of the provenance of that gas. If you can't describe the exact place, it's the general provenance was acceptable.
Right, good. I'm sorry, Vanny,
and I think it's
yeah.
the likes of MIQ that have already done a lot of work on gas certification, especially in the US, and they are now expanding into other countries. However, and I have to plug our brilliant modeling abilities in the in WoodMac. We have been really able to model global gas flows using global gas model, as well as crude refining model, and the impact of this regulation, MER regulation, on security of energy supply for Europe, but also impact on other flows. And even if we assume, this is like, really benign scenario, if we assume that the European Union allows top 10 importers of gas and crude just to bring everything in, make them compliant with
the
regulation.
top 10 importing countries, you mean?
Yes, yeah. The price of gas in our modeling still spikes, it doubles from say, $7, $8 to $16, $17 per MCF. And this is because there's simply not enough. I mean, what we are talking about is MRV compliance, so monitoring, reporting, verification. This kicks in 6 months' time. We don't have enough verifiers. We don't even have authority bodies defined within the European Union. Only 9 countries within the European Union have actually defined who their authorized bodies are. I think it just needs more time. It needs more time for importers to really find their way around it. I don't think that actually importers are generally against this regulation, but I think everyone is really worried that they may become non-compliant with all the consequences, legal and reputational consequences that will come with that, simply because they have not been given a chance to find the right channels to do it.
Right. So taking a step back from this specific EU regulation that we've just been talking about, how do you think these markets and these regulations are going to evolve over time? When I think about this whole issue, I sometimes think that there is a sort of a contradiction in, as you say, talking about responsibly sourced gas or certified gas, in the sense that if a market customer really wants to push towards decarbonisation, they will stop using gas altogether and they will go to renewables or nuclear or maybe hydrogen one day or whatever it might be. And if a customer really wants gas, they just want gas and they want it at the lowest cost possible. As you say, Anita, a lot of customers are price sensitive, and so they don't really care about the emissions and they're not going to pay a premium for gas with low associated emissions. So there's an excluded middle. You're talking about a product which would fit kind of in the middle there, which is gas, but with lower emissions. Long term, is there really going to be a market for that? I wonder. I mean, what do you think, Anita?
So in one of my prior roles, I was working for a development company in the United States that was trying to build an LNG facility to deliver into Europe, primarily because of the location. And this was at the height of ESG.
So this is how long ago?
This is between 2018 and
21,
yeah. So this was the peak ESG
sort of
period.
Immediate aftermath of the signing of the Paris
Correct,
Agreement and
yeah.
so on. Yeah.
So we were told you need to include these very lengthy ESG clauses in your contract, and you have to comply with this, and this. And we had our own upstream position, so we were actually thinking, okay, we can probably comply with all of this, and we can probably do it, but it came at a cost. And when we presented that cost, they didn't want to pay it. They simply did not want to pay more for this particular responsibly sourced gas. So my view is that these are sort of virtuous things that you want. They cost more money, but you don't want to pay for them because then you become uncompetitive. If you bring in gas into Europe at a higher price to manufacture steel, you're not going to compete with India, who is not willing to pay that higher priced gas to manufacture steel. So at some point there has to be a balancing, and I think it's coming.
Right. So that's interesting, though, because then the other point, which is very clear, is that if you look at the history of climate policy, it has been on a pendulum, certainly since the 1990s, been swinging backwards and forwards. It swung in one direction, away from climate action, essentially, and swung quite some distance in the past few years. At some point, it's going to swing back, I guess. Climate change hasn't stopped happening. The climate is still changing. In particular, if depending on how this El Nino system plays out, we may see another surge in temperatures globally. We may break new records. And that, I'm sure, will kind of bring the issue up the agenda in terms of people's consciousness. So how do you think that's going to play out there? And as I say, given the swing of the pendulum, people not being able to just ignore climate as an issue, we have to find some way through, don't we?
We have to find some way through, but remember, we're also in a very difficult social, political environment. All of these crises layered on top of each other in the last decade have actually reduced the standard of living in Europe and the UK dramatically. The public cannot sustain more taxation. Industry cannot sustain more cost. Energy is the lifeblood of any economy. And if you're paying more for your energy, then you simply can't continue as a successful country. And so whilst everything that you say is important, climate change is important, climate change is changing every day, we're going to have to learn to live with the effects of it, because I don't think anybody is willing to pay for it.
Vanya, what's your expectation? How do you think it's going to play out?
I actually think that very restrictive climate regulation has been very detrimental to the uptake of clean technologies. And I'm again talking about the Western sort of hemisphere, because you just can't force people to really support all the points that Anita made there, and it made us in Europe really not very competitive. And we talked the last couple of days about reduction in demand in the European Union. Well, quite a lot of that is because we are deindustrializing. We are just like losing our industry to other regions, to the US and to China and other areas where actually energy is very, cost of energy is very low. I think where there is kind of real risk to the fossil fuel industry is in terms of substitution that will come, from the energy transition megatrend that is driven by China. Low cost of technologies, deployment across Southeast Asia, Africa, real sources of growth of that demand could actually be displaced by very cheap Chinese clean technology. So that will have much more effect and impact on climate, warming climate, than I think any regulation can achieve. So we just had very, very different approaches to the energy transition. On one side, we had this like really heavy-handed, regulatory-driven approach. On the other side, just the lowest cost of energy, and we're just going to focus on scaling up these clean technologies, and they've succeeded. And now we completely depend on this Chinese technology. If we want to deploy our solar or wind here, we have to buy Chinese technology, because otherwise we simply cannot make it economically ourselves, because our cost of energy is way too high.
Vanya Kretschmar, Anita Adedra, thank you both very much indeed. I next spoke to Arturo Gallego, who is the global head of LNG at Centrica Energy. And I started off by asking him why Centrica had an LNG business.
Centrica, kind of the oldest utility in the world, 1812 was founded. So hopefully people know about that. On the LNG, it's kind of I would say, younger business. So we started properly this business in 2014. And when thinking about what we wanted to do, it wasn't just kind of start with developing more on gas. It was properly building an LNG kind of a business. And so at the beginning, we said the same thing that we're saying now. Our strategy was to build a diversified web of assets within a controlled risk environment and with enough flexibility that traders could optimize. So we're looking at those three things, where the first thing was diversification. I think at the end of the day, everyone is talking about diversification now, but it's important, and we're seeing that buying everything from the same project doesn't give you the same certainty that you are buying and selling from different places. Risk framework, critical as well. We're seeing what's happening now. We need to take risk. Our business takes some risk, but we need to control and know what risk we're taking. And the third one is flexibility. We talked about flexibility in 2014. People are talking about flexibility now. People are even overpaying for flexibility. And I remember, when we built this business, we got some strategic advisors to the company. And they were telling us that the only way of succeeding in this business was size. So we had to be 10, 20, 30 million tons of size. At the time, we said, no, we think if you build the right portfolio with the right flexibility, you'll succeed. We have proven that we're right. I think a lot of people is looking at that now, but I think we started with that in 2014.
So, as you were saying, everyone is thinking at the moment about security of supply, top of everyone's agenda because of the war in the Middle East and the disruption to exports through the Strait of Hormuz, the loss of about 20% of the world's LNG supply, which I think amounts to about 3% of the world's gas supply. We've seen gas prices spiking in Asia and in Europe. How can LNG help manage that kind of supply shock?
I think there are two things. I think someone mentioned that in the conference yesterday. LNG is doing a great job. LNG is available. Even with the largest crisis we have ever experienced, I think LNG is there. So where people that needs it, LNG is available. So it's there. The problem is affordability that is linked to that. But I think security of supply, I think everyone needs to play their different role. And I think we as Centrica, the role that we're playing is that we're investing in long-term deals. I think at the end of the day, if we don't commit on long-term deals, projects cannot take FID. So at the end of the day, it's like our role is to link those customers with the producers and just provide whatever each of them needs. So we're doing that. I think but the big push and the big responsibility lies on the governments as well. So I think is make sure that they build the right infrastructure, they have the right incentives for people to take the risk, and at the end of the day, they are the ones that need to make this connection between producer and consumer easier.
How do you see this crisis unfolding then? We have had constant reports of deals about to be done, and possibly as a result of that, prices have not really gone through the roof yet. Actually, if you look at what's been happening to oil prices and then European gas prices as well, they kind of shot up when the war began and have actually come down a little bit since then. But if the Strait of Hormuz remains closed, it does seem very likely problems will become much more serious. So how do you read it in the gas market?
I think I'm an optimist, so I'm still hoping that something positive will happen, and we'll have a ceasefire and we'll have everything kind of sorting it out. In the case of that not happening, I think the situation is complicated. The amount of oil and gas that is produced in the region is massive, and the market needs it. So if I look at gas, Europe will struggle this winter. It depends on weather, it depends on how everything works, but the situation could be really can be complicated. And at the end of the day, what we have seen that the market does in those situations is increasing the price just to destroy demand. And this is what I think that if nothing is sorted out in the coming months, we may face this winter. But I think you're right. I want to believe that most people is more optimistic, and they assume that things will be sorted out before we get into the winter.
Because so far, actually, the impact has not been as severe in Europe as the aftermath of Russia's invasion of Ukraine. Prices went much higher then in 2022 than they have this time around.
Yeah, I think that the main impact has been in Asia. And when you look at how the lack of supply has been impacting areas, I think Asia has taken 70 to 90% of the impact so far. The only thing is this potential impact, it cannot last forever, and we're already seeing some more purchases coming from Asia. So I think this kind of a help that Asia has provided to Europe, it may start changing, and I think this is the moment just to sort everything out, or we will see more competition for LNG.
Do you think Europe is prepared for this potential shock to hit? Because perhaps things haven't been as bad now as they were in 2022, is there a bit of complacency out there? Is there a sense that people are not fully appreciating how serious the situation could get?
I think Europe is prepared. I think that we have learned a lot from the previous crisis. So I think we have better infrastructure this time. I think we are better prepared. I think everyone has a slightly different view, and I think there are different approaches that the governments will be taking. I think it's a complicated kind of a question on knowing what will happen.
How do you think this crisis might change gas markets in the longer term then? Do you think this is going to accelerate the push to move away from gas? Is it going to accelerate investment in coal, in nuclear power, in renewables, as countries try to reduce their reliance on imported gas? Or do you think actually once the crisis gets resolved, we'll kind of go back to where we were before?
I think that may change some behaviors. And I think to me, it's not because of the current crisis, it's because it's the second kind of a crisis that we have seen in the gas market in the last 4 or 5 years. So I think people are thinking on what to do. I think I believe that on the long run, we're still kind of on the right path for gas. I believe that there is a lot that can be done on substituting some coal, oil, even wood that is burned all around the world and convert that into gas and reduce emissions. So I think that may happen, but I think what we need to see is what we hopefully will see, that is all that new gas that is coming to the market will take prices slightly lower, and that will incentivize the demand. I mean, it's very difficult to incentivize demand at $15 per milliBTU.
You mentioned emissions. It feels like emissions have been very much driven down the policy agenda. There's much more focus now on energy security for obvious reasons. But you at Centrica are still taking some moves to reduce emissions, to buy lower emissions gas. What's your thinking there? Why are you still kind of interested in the emissions profile of the gas that you're selling?
I think to me there are two things. I agree with you that people are prioritizing now security of supply, and that makes sense. And at the end of the day, what we're trying to do is make sure that you have security of supply, that you have environmentally friendly supply, and that you have affordability. And I think in the current situation, mixing the three is getting complicated. But I think there are certain things that can be done. I think I'm a firm believer of going step by step, and that will take us into the right path. I mean, we have been doing different things. So if I look at shipping emissions, for example, when we took our vessels into dry dock, we're looking at what to do that could improve emissions. There is one very special anti-fouling paint, expensive. And we're thinking and debating what to do with that. I mean, we did it. We decided to pay for that anti-fouling painting. I mean, that improves 3% the emissions of the vessel.
That's amazing, just from using a different paint.
But is that going to change the whole emissions in the whole world? No, but it's a small step into the right direction, and we're super happy with how all that is developing. I mean, another example is the deal that we closed with Centrica on responsibly sourced gas.
Let's go into that a bit, because I'm interested in this question. First of all, perhaps useful to define in terms, what is responsibly sourced gas?
So I think when you look at what has happened in the U.S., so the U.S. has decided to start measuring and controlling the methane emissions of the world. So production, I mean, they look at what is the emission. I mean, it's getting super sophisticated. So now you have even drones checking methane leaks and things like that. So it's very sophisticated, and it's something that everyone is moving towards in the U.S. You have different grades of different qualities depending on the emissions. And I think this is, so basically what you are buying is gas that is certified to have certain emissions when this is being produced.
Right. And you've done a deal to buy that gas then for a premium price? How does it work?
I think it has a premium. I mean, at the end of the day, if you think about the companies, I mean, they're paying just to be certified and so on. So currently, people are looking at, okay, I need to cover at least this cost of being certified. And I think this is going to move towards a market in the future. But nowadays, I mean, companies are doing that. I mean, we bought it just to cover all of our production from the US on the LNG side.
Right, so you're paying a premium for it. Can you sell it at a premium, though? I mean, it feels like there isn't really a premium market yet out there for gas with lower associated emissions.
No, I think that is. I mean, I would say there are two different paths going, and we have had a lot of conversation with a lot of people in the US, with producers in Europe, with consumers, and I mean, there are two approaches. One is, okay, do you want to have responsibly sourced gas or not? The other is, what is the regulation going to say? And this is the thing that a lot of people is looking at future penalties linked to low methane emissions and things like that. I think all that is in place but not 100% defined. And I think this is why nowadays, I mean, some people have decided to stop it. I mean, there was one of the people participating in the panel yesterday that said they did a lot of work on this, but then as Europe didn't really progress it, they stopped it. I think we decided to go ahead regardless, because I think it's a good thing. I think just saying that, I mean, you pay a small premium, but you know that this is certified and you know what is the emissions that you are taking.
And this European regulation, this is the Methane Emissions Regulation, right, which is being phased in at the moment, and that's going to affect what you can import into Europe, right, including gas. It has an impact on that. How is that going to affect your business, do you think?
I think it should affect everyone's businesses because at the end of the day, the European Union is going to be asking everyone to bring gas or LNG that is certified. Still, I mean, it's in the process of kind of organizing the regulation properly. It's not easy, and I mean, the US is really well advanced on this. There are some other countries that are less advanced. I guess that everyone can do it, but I think it is something that needs to fine-tune yet.
Right, and it's been pretty controversial, hasn't it, that regulation, as you say, not in terms of the principle so much as the practical implementation of it. And there's a pretty clear potential conflict then between emissions reduction and energy security. If you say there is some gas that we can't import because the associated emissions are too high, that then is potentially a threat to energy security. And it's not yet clear, is it, how the EU is going to navigate that contradiction?
Yeah, no, and this is the thing is just as I was saying before. I mean, you have this trilemma just to fix, that is emissions, affordability, and security of supply, and it's not an easy one, and current market doesn't help. But I think this is what the European Union and any government in the world needs to kind of decide how they are managing and try to kind of fix everything.
So how do you think the gas market is going to evolve in the long run then? Again, thinking about the way things have changed in recent years, probably 5 years ago, a lot of people in Europe thought that that economy would be on a pretty rapid path to decarbonisation and to phasing out use of natural gas, certainly cutting natural gas use very substantially. That ambition seems to have faded. Commitment to those decarbonisation goals is very much being tested. How do you think that's going to play out?
I think we need to kind of combine everything, and I think this is a thing that is like maybe in the past we have been getting to a little bit of extremes, and it's like we're either doing this or we're either doing that. I think there is, as I was saying, things that needs to be progressively tackled, and I mean, if I think about the future, I think that energy transition is going to happen, and we need to keep on investing. But at the same time, as we develop new technologies and so on, we need to make sure that our lights are on. And I think this is the thing that we need to make sure that we can combine that properly. I mean, I've been saying for a long time that energy transition is a transition, and I think gas is needed for that transition. So, I mean, when people were thinking about what to do, we were committing on long-term deals of 15 or 20 years in the US just to buy more gas, and we're still convinced that gas will be needed for the transition. Both things need to happen, but gas needs to be there just to support it.
Arturo Gallego, thank you very much indeed. Finally, for an alternative perspective on the issue, I spoke to TJ Conway of the non-profit RMI, and I asked him whether he thought the EU's methane emissions regulation would threaten energy security in Europe.
RMI's approach to this work has been in support of the technical solutions that can advance the effective implementation of the regulation. And through that, we have done work, for example, on the question of traceability. Right. If you look back 18 months ago, there was a lot of concern that there was no way no market mechanism that would enable sort of direct tracing or a form of tracing that would be compliant with the regulation. Over the course of that time, we helped to inform a range of stakeholders about options that were available, right, including one called the constrained book and claim approach, right, which is complementary to direct tracing, right, where you can actually issue a certificate that demonstrates the methane intensity at the supply side all the way upstream, and ultimately pair that attribute with a cargo that comes from the same country as a way of not only still sending a market signal to that methane mitigation is a priority, but also being able to do so with a structure that is completely viable today. We already have examples of this working.
Right, well, yeah, exactly, because that seems to me to be a classic example of where people say problems emerge. Look at the United States, where if you buy LNG from the US, it'll come from a tank which is filled from the US gas pipeline network, and you don't know where those individual molecules of gas have come from very often. And if they've come from the Haynesville Shale in Louisiana, parts of Texas, they might have actually relatively low associated emissions, and so that probably would meet the European standard. But if they come from West Texas, the Permian Basin in West Texas and New Mexico, where there's a lot of flaring and the gas comes associated with oil production, then actually they might have relatively high emissions and poor performance in terms of controlling wasted methane. And so if you don't know where those molecules come from, the molecules aren't labelled, obviously, then that creates a real problem, doesn't it, in terms of understanding exactly that issue. As you say, talk about traceability. How can the approach that you're talking about actually address that problem of profound uncertainty about the emissions characteristics of the gas that you're buying?
Right. So if you are able to certify at the upstream or the asset level methane performance of that particular asset, you do have a certain level of clarity about the methane intensity from that particular asset, for sure.
Right. So that would be the example where you've got a field and the gas is produced in the field and it goes down a pipeline and it goes to the LNG plant and then it gets liquefied and put on the tank, and then that's what you know about. As I say, what I'm talking about, though, is the other sort of extreme from that, where all the gas from all these different sources is getting mixed together and you don't know where it's come from.
Yes. And even still in that case, you at the very upstream level, you can certify that particular asset and issue a certificate at that point. And yes, the U.S. is quite a complex supply chain, and so in several instances, it's hard to trace the attributes all the way through the supply chain. But the regulations are focused on the upstream. And in that sense, if you can issue that certificate and you can pair that with any cargo from that same country that is imported into the U.S. or into the European Union, then at the very least you are sending a signal that methane performance matters. And that is the beginning of the development of a global differentiated market that helps increase transparency and ultimately it incorporates methane intensity and methane performance into the decision-making of buyers and sellers.
Got it. So that's really interesting. And has the EU said that it will accept that approach?
Yes. So we helped to develop these options that include direct tracing as well as what is called a constrained book and claim approach, and proposed that in a discussion draft for public comment after significant conversations with a range of stakeholders. And European authorities in December stated that certification, which is the constrained book and claim approach, would be acceptable alongside a direct tracing approach. So both of those options are now available. And in the coming weeks, we expect to hear more about some of the specifics to help inform exactly how these approaches would work.
Right, got it. So back to the fundamental question about energy security then. If the EU does adopt this approach that you've proposed, that actually would enable the EU to continue to import gas from the United States, and therefore a lot of these energy security concerns would be allayed. Things should be okay on that basis.
Yes, and it's striking that balance between what are the priorities inherent in the regulation, which is to support methane mitigation globally and domestically, right? Because all of these products are ultimately sold within the European market, but also recognizing that there are important energy supply and energy security issues that are as high of a priority, right? Especially in certain periods of time, like what we're experiencing today.
TJ Conway, thank you very much indeed. We'll actually have more from TJ on the Energy Gang very soon. For now, though, that's all from this episode. Thanks very much again to TJ Conway, to Arturo Gallego, to Valentina Kretschmar, and to Anita Adedra. Many thanks to our producers, Stuart Duffy, Molly Merman, Joseph Hisar-Yasu, and above all, many thanks to all of you for listening and watching. We'll be back very soon with all the latest news and views on the future of energy. Until then, goodbye.